Kunal and Uresh are also here. Kunal, let me start with you. Nifty, Bank Nifty, one would have thought that after hitting 22,000, we would actually, breathe, take some, fresh air, but the bulls are just in the party mode right now. Lohri dancing is still going on as far as market is concerned. What's the next stop?
So now the next stop is more, so rather than looking at the upside, we look at the downside, which is the next support. That the next support for the index, or the major support now for the index, which was earlier at 20,700, 750 mark, is now shifted significantly hard to 21,500. This was the point where in the last week or so, we tested three times at this 21,500 mark, and we've more or less managed to protect those levels for the index. So on the way up, when the index is starting to get into an uptrend, we look at the first important support, that which is the next, first major support is 21,500. Then the next target on the upside. So right now we would be looking at least another 250 to 300 point scale up for the index. So what actually matters and happens is that when an index breaks past our psychological 22,000 kind of a mark, now there are huge amount of option writers, call writers, which would have probably built up their positions there for the index. Now if we sustain about 22,000 mark, then the call writers, they change their stance and they become put writers. That itself triggers the next 200 to 50 points rally for the Nifty over the near term.
That's correct. In fact, we have Soni Patnaik who will add more color on the F&O side a bit. But Devang is also joining us. Devang, the joke for 2024 started that the Nifty will definitely cross 24,000 in 2024. Can you see that as a possibility, or that's expecting too much?
Thanks, Ajay, for having me on the show. Good afternoon to all of you.
Good afternoon.
I think, in the sense that we are right now in the times that probably we saw 20, 21, 22 all coming too soon. I think 25 sessions it took the market to come from 21 to 22. So it's very well possible. Ideally, why? I don't want to put a figure to the index right now, but yes, if you ask me, there are a confluence of factors, be it macros, be it global macros, be it local macros, be it micros. Sentiment towards equities as an asset class is great. Earnings, I think markets are slave of earnings. Earnings has started on a good note. More so, the last quarter was also good. I think we are seeing margin expansion. We are seeing market leaders coming back to the fore. A lot of companies like Reliance, a lot of IT participants, which are huge overweights on the indices. I think all this confluence of factors, plus I think the foreign investors are still, as such, we can say they are still missing. If there is a huge flow which can probably start at any point of time, where India is at the top of their list in terms of their spreadsheet, I think, yes, it's very well possible. But ideally, I wouldn't get carried away by index targets. If this is an earnings-led rally, I would be more delighted rather than being a rally of everything and anything or laggards doing well.
Talking about the earnings-led rally, that's quite visible in the IT names. So Wipro and HCL Tech, though of course they're off the highest point of the trading session. Talking about a few more movers, of course LIC was reacting to the news flow that there could be a potential refund of almost 25,000 odd crores. So that stock had surged intraday, but you also have New India Assurance as well, which is now perking up a bit, and Blue Star is the other one which is coming up on my radar, and ditto can be said for GIC as well. All of these stocks are inching higher in the last few minutes. But it's not just gainers, there are obviously losers as well, and Bajaj Finance and L&T are the two stocks that are catching my attention because of the underperformance. Soni, what do you make of the underperformance on Bajaj Finance and L&T right now?
Good afternoon, Anisha and Ajay. Thank you so much for having me on the show. Speaking of Bajaj Finance, I think, it has been underperforming. Plus, there are some short built-up positions also. Immediately, if we see that, 460, 74.50 is a support. But however, if the support were to break, you can see further weakness again cropping up to 7,200. On the technical front, we can see that there are multiple resistances plus call writing happening at 7,700. So that remains a very crucial resistance for the entire series. So as of now, it looks a bit difficult for any reversal or bounce back above 7,700. In fact, just one may watch out for 74.50 support. If it breaks, you can see some further downside. Speaking of L&T, I think L&T is still in a good range because it is still holding up above 5,400, and it has acted as a very crucial support for the entire series of, at 5,400. So as long as 5,400 is not breaking on a decisive closing basis, L&T can still has a chance to bounce back from current levels, and it can again test 5,500, 5,530 levels. I think L&T is in a better position, and structurally also it is looking better for risk reward ratio with 5,400 support.
Is the Jio Financial business model, Devang? Purely on the business model, I'm asking. I mean, there is nothing great to talk about earnings right now, though the earnings are scheduled. But I'm trying to understand next 2-3 years, what can they achieve?
I think yes, Ajay, a very relevant question. I think they are going to probably enter every financial field where they are not present. We also know that they have sort of tied up with BlackRock, which is a behemoth in terms of foreign global AMC, and they would target more of passive products. Right, ETFs is now sort of also gained a momentum in terms of also Indian investors understanding that it is a market rate of return, which at least you can probably earn while you invest passively. So my sense is that the financialization wave that we are going through, the shift from physical assets to financial assets, and right now we are seeing a rally across even physical assets, be it real estate, be it gold. I'm hearing a lot of people getting out of stuck real estate in a lot of cities and smaller towns, and this money also probably is diverted towards financial assets. And we have seen a good momentum building across primary markets, across secondary markets. Mutual funds are seeing record flows. Yes, but the UM crossing 50 lakh crore. My sense is that this insurance as an industry, wealth management, AMCs, brokerages, I think we seem to be getting into the penetration mode in the next 3-4 years will be very interesting. So I think the model that Reliance would walk around will be a little bit of a more of a retail model where a lot of participation can be attracted. So I think it's getting into an interesting trend where financialization will be the name of the game for some time to come.
Jio Financial, of course, will come out with its earnings today. We know business-wise and earnings-wise, there's not much to expect, but I think the commentary today that comes out might be interesting, and that's the reason that stock is inching higher. If I have it right, post the last earnings as well, the company had kept an earnings call wherein they talked about the products which are lined up further, and I'm guessing it's a similar kind of expectation this time, and that is what is driving the stock price today. So you have Jio Financial Services sitting at around 270 thereabouts. But Devang, I want to ask you a question about some of these insurance names and particularly the public sector entities, the New India Assurance, the GICs and the LICs of the world. Is this even an investable idea? And I ask you that because when rest of the PSU pack rallied very hard last year, they did not. So is this a case that they can probably rally this year, or these are the underperformers that one should not touch?
I think, see, it's right now, it's very difficult to find out any underperforming sector. And you're right that while the entire PSU banks rallied, while the entire PSU pack, be it capital goods or power related companies also rallied, this businesses were under sort of an hibernation. I think, yes, it's a moment of glory for all these businesses right now to come back to the fore. Yes, businesses for some of these companies have also improved, but one needs to also take cognizance of the fact that a lot of these private companies are creeping into the market shares of these general insurance and life insurance companies, which are state-run. As you know, that still there is a lot of pie, a lot of under penetration, which is right now going to happen. So yes, it will be probably a guess that who will gain market share. But most of these companies have sort of professionalized their standards by large mean. In no sense they are right now probably going to underperform if the large insurance guys do well. So my sense is that yes, to sort of give a short answer to this long sort of explanation is one can't right now ignore these companies. But as I said, there are a lot of interesting sectors which one can invest into rather than getting into the state-run insurance companies. I think private insurance companies also have gone through a large bit of correction. So there a lot of value still lies over there, and then probably the second-run companies can come to the fore.
Devang, Soni, let's take a short break on that note, but I'd like to discuss LIC with you on the charts, and we have a big story also developing in LIC, because of which it's running 3-4% in trade. On the other side of the break, we'll get Anurag Shah to talk about what's happening there. Come back.